Perseus Mining has posted a profit just shy of $500 million, up from nearly $300 million last period. Revenue rose 27% to $1.4 billion. Underlying earnings jumped 46% to over $800 million. The company attributes this growth to higher gold prices and also higher gold production. Perseus Mining declared a final dividend of 2.48 cents per share, including a bonus dividend of 1.77 cents per share. The company is forecasting gold production for the next 3 years hedged at an average price of $2,008 an ounce. Well, I'm pleased to say we are joined by Jeff Quartermaine, CEO Managing Director of Perseus Mining, live now. Jeff, congratulations. Talk us through these results.
Yeah, thank you very much. We're very happy, obviously, that we're able to report these results. I mean, clearly, it's the result of a lot of hard work by a lot of people, but it is gratifying to be able to see the fruits of your labour come to fruition.
Is it really thanks to the increase in gold prices, or tell us a little bit more about what boosted this very impressive jump in revenue?
Oh, well, it's a range of things. Certainly the gold price has been instrumental, but we've also been able to improve our production. We've kept a lid on our operating costs in a fairly difficult economic environment. And so I think, there are a number of factors that have contributed to the good result. But I think that looking into the future, we expect to be able to continue around these levels for some time.
It's always good when shareholders get a return, and you've also included that bonus dividend that I mentioned of 1.77 cents per share. Can shareholders continue to kind of get these kind of rewards? What was behind the bonus dividend?
Well, what we set our dividend policy at some time ago was basically setting the dividend at a 1% yield. Now, we did that on the basis that in the event that we had surplus cash beyond what our immediate needs were, or we've had some particularly good event, then at the board's discretion we would increase the return. And of course, with the results that we've generated this year, taking into account our cash balances and what our needs are in the short term, we've decided to double that from 1% yield to 2% yield, which has given rise to the 2.48 cents final dividend. But look, we are looking very carefully at our whole approach to capital management, and we do have very significant cash balances, and I'm certain that shareholders can expect to receive a return, from their investments going forward.
You've seen an increase in your African gold reserves. Can you tell us exactly what your forecasts are for full year 24 in terms of getting to, I believe, an estimate of more than 3.4 million ounces?
Oh, no, well, look, our reserves are quite a lot larger than that. I mean, the way that we need to report, the 3.4 million ounces are the JORC compliant reserves, but they don't take into account the reserves that we have at the Mayas Sand project in Sudan, which has around 3 million ounces in its own right. So our reserve base is substantially larger than the JORC compliant reserves. And what we are doing at the present time is working very hard at organic growth, so exploration around our existing infrastructure, which has been incrementally adding to our reserve base as we go forward. One of our key targets is that not only do we need to replace the reserves that we deplete each year, but incrementally add to that. And I'm very happy to say that certainly was achieved in fiscal 23, and we're looking forward to similar outcomes into the future.
So you mentioned there Sudan. Can you tell us a little bit of an update as to what's happening in that country, particularly given the civil unrest?
Well, look, to be perfectly honest, no, I can't. I don't believe anybody from outside of the country can really pass a factual opinion. Lots of people make statements, but whether they're true or not is something else. From our point of view, where our mine site is, or our potential mine site is, 75 kilometres underneath the border, it's secure, it's very safe at the present time. We're standing up an enhanced security force just in case we need to rely on that, and we'll be resuming exploration activities on that site in the very near future.
So when do you think shareholders can expect an update on the actual, I guess, the mine life plan in Sudan?
Well, look, I think we're progressively adding to the reserve inventory, even though we haven't published it as we speak. Over the next year or so, we will look at the life of mine plan and publish that. But I think investors, we've said this publicly before, and I repeat it now, given the recent events in Sudan, we will need some further confidence that this is a stable operating environment before we invest $500 million odd in the capital that's required for the project. So I think that the way the situation is at the moment, we're not near that investment decision. We'll be holding off for probably a couple of years, I think, before we commit to full-scale development. But in the intervening period, what we will do is we'll get our drill rigs turning, and we'll continue to grow the size of that reserve incrementally over time. And I think that when we do get to the stage where we're comfortable to invest, this is going to be an outstanding mine.
If you had to pull out, if this civil rest continues, what kind of hit would you be taking?
Well, we don't have an awful lot on the ground at the moment. I mean, other than camps and drill rigs and other equipment relating to the day-to-day existence up there, we haven't invested massively in earth-moving equipment or infrastructure at this particular juncture. So we won't have to move anything terribly much. But look, we're not even contemplating that, I have to say. I mean, we're very comfortable working the way we are. There hasn't been any disturbance whatsoever related to what's going on in the south of the country on our site. And I think bear in mind we are something like 900 kilometres north of Khartoum, in the middle of the desert. So we are in pretty safe position right now, and we're getting ourselves worked, getting things in place in order to be able to resume activities. Now, one of those things is getting supply lines going, so being able to bring in fuel, being able to bring in food, etc., the things, these consumables that are needed to conduct a drilling operation. We're very close to that, and I've got to say we've got outstanding support from the Sudanese government, who are very, very keen that this project, that the benefit of this project not be lost to the Sudanese people, and we're working very closely with them to ensure that our asset base is safe and that our operations can continue.
Absolutely, I can imagine it would be providing a lot of jobs when it does get off the ground too for the people of Sudan. Let's talk though, Jeff, about your reduced emissions intensity and how your sustainability focus is going.
Well, look, our sustainability focus is extremely high, and people talk about ESG. When we spell ESG, we have a small e, a very large S, and a small g. E and G, the environmental side and the governance side, are fundamentally important and non-negotiable, and we work very well at those now. But the sustainability, the social piece, is where we really put in our effort, because without a social license to operate, we don't operate. It's as simple as that. And so we're working very, very carefully and closely with our host governments, host communities, our workforce, to ensure that what we do when we go to a country is sustainable, and that when we ultimately leave, which one day we will, we leave the place behind in better condition than what we found it. In terms of the emissions, I mean, we do what we can do. Given that we've only got relatively short mine lives, sort of 10 plus years of mine life, there's not an awful lot that is going to happen on our mine sites that is going to affect global warming. However, we do look for whatever opportunities are available. For instance, we are looking at various power solutions that involve both renewables and thermal power generation and things like that. We're looking at using our trucks in a more efficient manner to reduce diesel consumption, etc., etc. So we do what we can do, but the environment is not our focus. Our focus in the ESG space is on our social license to operate and how we conduct ourselves and are recognised and welcomed by our hosts.
Jeff, with such an impressive result and taking the Sudan piece aside in terms of staffing levels, what are your plans in terms of, I guess, boosting staffing levels and perhaps boosting CapEx too?
Well, in terms of staffing levels, we're not looking to boost staffing levels. We're not looking to reduce them either, I might add. But as was evident from our presentation earlier today, we do employ mostly local people. In fact, on our Edikan mine in Ghana, we have no expatriates at all. They're 100% Ghanaian employees. So wherever we can employ local people, we do. And wherever we can, we train them, skill them up such that not only are they good employees for us, but they have a future if they want to take their skill sets elsewhere. So we're not looking at massively expanding our workforce. Our workforces are well established. but we are looking at using our people in a very efficient way, building the teamwork and helping our people to live their best lives.
Okay, and in terms of CapEx, in terms of future spending plans?
Well, look, at this stage of the game, we as I said, we've set the Sudanese property aside. We will be spending some capital on the development of an underground mine at Yaouré, which is one of our Ivorian mines. We'll come out later this quarter with an updated life of mine plan on that project, which will spell out quite clearly precisely what the capital requirements are. There will be some capital required to develop that mine. But it's not overwhelming by any stretch of the imagination, bearing in mind that we do actually have something like 790 million of cash on the balance sheet, and we have an undrawn line of credit of another $300 million US. So, well over $1 billion of funding available to fund organic growth and any acquisitions that we might consider as well. So we are very well financed, in a very strong position to conduct our business going forward.